Hey guys, what's going on? It's your big dreamer and doer G Dinero coming to you today with another TA Tuesday. This time it's December 2nd, 2025. Just a few weeks left in the year, and we will be talking about how Bitcoin and Solana are sucking wind. MicroStrategy is down. Tesla's actually starting to creep up a little bit and more. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So let's dig in. But first, remember a special thank you for Bull Bear Saul. Bull Bear Saul said, an amazing start into my Wednesday. Not sure what G is talking about. Just joined the community. Within a few weeks, I started rebuilding the charts myself after taking his classes. In the end, it's not rocket science, and everyone in the community supports each other. Cheers, GB. So thank you very much for that, GB. I appreciate that. That was in response to last week's TA Tuesday. Also, CCJ56 said, yay, I've been waiting for your video, G. I seriously needed the fired up version of you. The MicroStrategy FUD was the worst I've seen in a very long time. Thank you for all that you do for us. Also, I have a feeling I'll be holding on to the MicroStrategy side of the pair trade for a few more months if Bitcoin hits the $70,000 marker. So thanks, Bull Bear Saul, and thank you very much, CCJ. And let's go ahead and go to the next slide. The next slide is, guys, we extended the founders launch of the community. So initially it was going to be through the end of November. And we decided that based on the response, based on the fact that there were still people just hearing about it after the second week we had been in action, the third week we had been in action, we've decided to go ahead and extend that out through the end of the year. So you can still join with all of the founders' benefits, with all the founders' benefits, and you get $50 off each month off of the community. That's locked in for life while you stay in the community, right? So if you want to find out all the details, how to sign up, what it costs, all that, go to gdinerocoaching.com/founders only and come join us over there in the Cool Kids Club. We're having a lot of fun in the community. People are learning heaps and heaps, and it's super cool to see the light bulbs going off each day with people that have maybe been struggling with how to sell a covered call. Maybe they've been struggling with selling cash secured puts, when to buy leaps, when to do synthetic longs, how to pair trade Bitcoin and Solana, how MicroStrategy's MNAV affects its price and how to use that as a guide for buying and selling, what to do to maybe manage a portfolio, right? To structure a portfolio in a way that benefits you with your risk profile, right? Of course, none of it is financial advice. It's just me sharing things that I've learned over 3.5 decades of doing this. All right, so let's dig into the charts. All right, we're going to whiz through these things pretty fast today, guys. So first, we had the Bitcoin TABI model. The TABI model is light orange, and you'll notice that the Meyer multiple well below 1. MVRVZ score all the way down by 1.53, or actually down by 1. Basically, there is no strength in the Bitcoin market right now. If you wanted to look at it that way, we are down near the true market mean. That true market mean comes from James Check over there at Check on Chain. And we've lost the short-term holder cost basis. We've lost the $95,000 line in the sand. We're now sitting on that true market mean, which is down at 81,633, and we're at 87.5. So just about $6,000 above that right now as we sit. Historical volatility still super, super low. Again, remember, I think it was last week we talked about this yellow channel. And if I put it on the weekly, you can really see it. How we hit the top of the channel and now are rejecting back down. Where could we find the quote unquote bottom? Well, could go all the way down to the very bottom of the channel like we were back here in 2022 and into 2023. That right now, the bottom of the channel today where we are sits at about $55,000. Will we get there today or tomorrow? No. What I'm saying is that channel is upward sloping, so that if you believe we're in a bear and we're going down, we may intersect this as this line slopes up. So I could extend that to the right a little bit. We could go out to maybe like 350. And I need to then bring this part up a little bit. So let me unlock that. We'll bring it up so that it matches where we were before. And now we can see it extending out. So if it takes all the way until, the end of the third quarter of next year, we're talking about $67,000 is the bottom of this channel. All right. So I'm going to leave it like that on my, on the TABI model, and it still makes sense. See how we intersected it 1, 2, 3 times right here. On the Bitcoin daily. Now, first I'm starting this on a monthly, then I'm going to show you on a weekly, then I'm going to go to the daily. So on the monthly, we've got 3 red candles in a row. The trend has already flipped down. That's the optimized trend. It flipped down at the beginning of October. So October, November, December, we've just been going red. We made a beeline for this true market mean like we were talking about. And we've pulled back to about the 38% fib level. That's this yellow line that you see right here. 50% would not be out of the question. That's down at $71,000. Again, some people think it's only going to go up into the right forever. No, we may have a pullback, and this is suggesting as so. Same thing here on the weekly. The optimized trend hasn't flipped yet, but we are close to flipping to orange. One more week of red, and this optimized trend is flipping down. In that case, once it flips down, it stays down sometimes for a few months, sometimes for almost a year, right? 9 to 10 months. So we'll see what this time holds. I believe it'll look more like this first peak back in 2021. That's my personal thought on it. You'll note that RSI on the weekly is at rock bottom lows, right? So look here on Monday, the 17th of November, we hit a bottom on RSI of 35.77. You've got to go all the way back to the bottom of the bear market to see an RSI that low. So that's just showing you it's behaving a bit erratically and giving us mixed signals. In some signals, it's showing topping signals and that maybe we're going to go into a short bear market. Other things are telling us we're already in that short bear market and showing signs of hitting the bottom, right? How long can RSI stay down for? Well, in this case, it was at this level that we're at currently from May all the way through December. So June, July, August, September, October, November, December, 7 months. That RSI stayed down in this low level, right? Could we stay in this low level for 7 months? Do we stay in it only for a couple of months and then rebound out of it? Nobody knows that answer for sure. But what we do see is we see that weakness. It shows up big time on the daily. Notice the shorter the time frame, the sooner that we would have realized that we were going into a bear. There were plenty of signals here to sell. There was a signal back here with a trend flip, a signal here with a trend flip, and a signal here with a trend flip. So plenty of signals for us. But notice here, the RSI is at 23.25. That's incredibly low. That's the same level we were at back in February. And so what that's telling you is, and mean reversion was further down than we've been since 2022. So it's just telling you this sell-off was like extreme, happened fast, dropped a lot in a super short period of time. And we could get a bounce from here. Some would call it a dead cat bounce. Others would call it a rebound. And maybe we go back up. Maybe all the short-term holders that wanted to sell sold into the long-term hands. See, the thing is, you've got long-term holders selling up here. They're selling the tops. The whales, the long-term holders, they were selling the tops to other people. Down here, the people that bought up top, they're selling their shares of their tokens, Bitcoin, right back to the people that sold it to them. See, you want to play the game that the whales are playing. You don't want to play the game that retail is playing. Retail's buying up here thinking it's going to the moon. Whales are buying down here and they're going to sell it to retail up here where they think it's going to the moon. And in the process, they're making money because they're taking profits along the way, right? So we talked about it here on the daily. Go over to the 4 hour. 4 hour is going to be more erratic, right? So if you notice here, lots of deep mean reversions. You would think each of these is a buying opportunity and then it bounces. Buying opportunity, bounces. These look more like dead cat bounces. And again, sorry to use the analogy. That's what it's called in investing. You notice that the RSI drops below 30 over and over and over again, but yet it won't keep it won't break out of this channel that we're in since the 2025 high back on October 6th. We just keep going down and making a beeline down. Again, for those concerned, how far could we go down? I think this shows it really well. There's this massive clump of volume. And actually, I'm going to go back over to the daily chart. It's a little bit easier to see on the daily chart. If we look back here and we look back at the last couple of years, right, of data, let that fill in. There's this giant clump of volume right here. That should act as support, right? I say should, but it just makes sense that people were willing to buy back here, and that was from the ETF launch. That's when we became, we went from under $1 trillion asset, or right at it, to well over $1 trillion asset. Institutional money came in, your Bitcoin treasuries came in, everybody came in and were hardcore buyers at this level back here. That's where all that volume came from. I find it hard to believe that we break far below that. Could we break to the bottom range of it? And the answer is yes. In fact, if you look carefully, the top of the range is right here at 71, and the bottom of the range is down here at about 60, which coincides just above where this realized price is. But you can see that volume cluster. If I open it up, you can see it a little bit more. And actually, the bottom of it is more like all the way down to there, right at the realized price. So this right here, that is our floor. That's in my opinion. Could we go lower? We can always go lower. The likelihood of it is very, very low. If we look over here on the Solana Bitcoin chart, not a whole lot going on, kind of trending sideways. Both Bitcoin and Solana are going down equally right now. That's why it's going relatively sideways. We're sitting in this support zone that we've been in for, months now. All the way, pretty much all of 2025, we've been in this support zone with one little dip below back in June and one little dip above here in September. You'll note that the mean reversion and RSI both picked that up very nicely. RSI was above 70. Those are selling signals. Selling what? Solana into Bitcoin. RSI below 30. What are those? Those are buying signals. Buying what? Buying Solana with Bitcoin. Same thing. Mean reversions, red dot, you go from Solana to Bitcoin. Green dot, you go from Bitcoin back into Solana. What about all these other dots? To me, the size matters, right? So these are just barely on the fringe of this green zone. That one's clearly in the green zone. So to me, that matters. How deep is it mean reverted from the norm? And if we go over here to the Solana chart, just Solana by itself on the daily, what do you notice? Again, structural downtrend looks a lot like Bitcoin, right? Bitcoin peaked October 6th. Solana had a recent peak back here on September 18th. We hit 260 and it's been downhill since then. We are now at half that price at 130. So it has lost 50% of its value in that time frame. I need to redo the fib chart on here, so don't even pay any mention to it right now. It's inaccurate. There we go. It's inaccurate right now. So go ahead and don't pay any mention to that. Where is our support? Well, we're sitting on it, right? Just below at the bottom range of it. If you look at this big clump of volume right here, this is where I've said that's it. We drop below that, we're going straight to 100, right? We're going right down here to 100. Below that, we might catch on just below 80, and below that, we're catching down here on 60, right? So I use VRVP a lot because it tells you where most of the coins were accumulated and where they're likely to be sold again. Right now, we're right here in this line in the sand zone. There's a lot of really good things, though, coming along with Solana that we have to keep in mind. We have to keep in mind that the ETFs are starting to launch, that Van Eck is starting to talk about people being able to pick up some Solana, that the network itself is pretty much handling all of the tokenized stocks. No, I don't participate in those. I have my own reasons for it because the token just represents a share, but you don't own the share. I want to own the shares. I've owned shares for over 35 years of investing, almost 40 now. So I want to own shares, the actual share in the company. I don't want to own some tokenized version of it. To me, that doesn't I don't know, doesn't fly with my investing philosophy. So with that said, we are definitely mean reverted to the downside. RSI was well below 30 at one point. Here, if we go over onto the 4-hour chart, same thing. There's that bottom of the zone that I was talking about. We're kind of right at it right now. We need to break back up, and I got to zoom out for you to really be able to see what I'm talking about on over here on VRVP. You'll note right here 143. Right? So every time lately that we've gotten back up to 140, 145, we've sold off. The selling pressure overwhelms the buying pressure. Then when we drop down here, the buying pressure overwhelms the selling pressure and we find a floor. That's all it is. It's push and shove, right? You go to the top, selling pressure pushes the price back down. You get to the bottom, the buying pressure props the price back up. That's support and resistance. That's what we mean when we talk about that. Right now, we're mean reverted to the downside. RSI is below, hit a low of 24 and is currently 45. So we've started to mean revert back up again. What does that tell us? It doesn't really tell us anything except if we're going to go back up, we'll likely go back up right here to where that red line was, which is at around 143, 145, resistance to the upside, support to the downside goes down as low as about 120. Ethereum's the one that we've talked about before. Sorry about the coloring being off on this one. Let me just change that real quick because that's weird looking. I don't know why it's dark, why it's not darker like all my other ones. I like it like that because it's a little bit easier on the eyes. What you'll notice here on the Ethereum chart, though, is, again, we talked about it, guys. We talked about it hitting the top here almost 4 times. 1, 2, 3, 4, 5,000. I said if you could get out near 5,000, that's a great place to take profits on Ethereum. Since then, we're down at 28.45. And I don't see this like any signs of life of this thing all of a sudden going and breaking out to new all-time highs. I think the all-time high was put in already. And that was done back here on 8/24/25, August 24th. And that's it, right? Now we're back down here near the all-time, or not all-time, but the last couple of years where that support level is, and that tends to be right around 2,600. We're bouncing on that. So 2,600 is support right now. Resistance, you're going to find significant resistance at 33, 3,400. That hasn't changed from week to week when we've talked about it. Coming over here to the strategy chart, again, stairway to hell. Actually, the fire pole down to hell, right? It's just going straight down right now. It is starting to find a bottom. It's hammering one out. You'll notice the green dot right here. You'll notice that in pre-market, we're at 171. We're wicking down into the 160s and finding 170 again pretty quickly. It's tending to go back up towards 1, right? These things gravitate towards an MNAV of 1. So when the MNAV is considerably down, here it's calculated at 0.85 for the undiluted and 0.95 for the fully diluted. And with the model that I use, I've got it around 0.88 to 0.9. So right now it's at anywhere from a 5 to 15% discount, likely a 10% discount. The Bitcoin on the balance sheet of strategy. That is zero confidence in strategy to make it. And it's up to you to decide. Do you believe the FUD, the fear, uncertainty, and doubt that's being spread all over the news right now? Or do you believe in Sailor and in Bitcoin long-term? Because all Bitcoin has to do is continue going up at a 20 to 30% CAGR. It's been going up at a 70. I just did a report on this for my inner circle. 78% has been the CAGR for the last 10 years. The last 15 years, it's like over 100, but I don't include those first 3 or 4 years of Bitcoin. It's a brand new asset, and it went from zero to like a couple $1,000s. But if you look at the last 10 years, it's returning consistently 78%. Now, I'm saying, what if it only does 40% of that and returns 30% per year, right? Instead of returning almost 80, it only returns 30. What would that look like? What would it look like if it only returned 20? And guys, the numbers are mind-blowing. They will blow your mind. This too shall pass. And I believe if MicroStrategy only stays at an MNAV of 1, they will be one of the largest companies in the world at some point because of the pristine collateral they have on their balance sheet known as Bitcoin. But it requires Bitcoin's price to go up. And as we know right now, Bitcoin is in a slump. All right. But on the mean reversion, that's the deepest mean reversion dot we've had on strategy on the daily in years. Literally, you got to go all the way back. Let that fill in for a second. You got to go all the way back here to 2022 or all the way back here to March of 2020, right? And by then, they weren't even in on the Bitcoin standard yet. So really, there's only one other time since they've had Bitcoin on their balance sheet where it was this, mean reverted or oversold to the downside. If we come over here to the 4-hour chart, you can see we've just stayed oversold, and except for this little pop back here on October 3rd, right? We had a little pop there, a little pop here in September. Outside of that, it's just been a series of green dots. It's just been RSI below 50. It's just been MACD below the zero line. It's been negative, right? Every time a little bit of buying pressure comes in, boom, the sellers come back in, the short sellers, the people trying to stifle the price, the people like banks that are concerned, JP Morgan, Chase, concerned that MicroStrategy might actually replace them as the one that's issuing the currency essentially in the future, because it's not really even currency, it's credit, and it'll be credit backed by Bitcoin instead of credit backed by a handshake from the US government, who's just going to continue printing their way to oblivion and devaluing your dollars that you worked super hard for. That's why you need assets. All right. So that's what's going on with strategy. I personally am still a believer in it. I sell weekly covered calls on it week after week after week. That generates more capital that I can buy more shares of MicroStrategy with. I can buy more shares of IBIT while it's down if I'd like to. On the dips of Tesla, I can buy more shares of Tesla. All theoretically for free, because I'm just selling covered calls against my MicroStrategy, generating that cash on a weekly basis. If you want to learn more about that, that's why you want to join the community, because in there we go over that exact strategy and how to do it successfully and fearlessly. That's the key, fearlessly. All right, cool. Now we're on Tesla daily chart. You notice we did mean revert to the downside. There's a little bit of a buying opportunity. That was a week ago yesterday, and that was on this second little drop down. So we are wicking down to here. We have rebounded right back up to the 50-day moving average. Note that we are finding resistance exactly here, which theoretically, if I just draw like a little zone right here and I go like this, right, to that price action, we're kind of in the middle of that. In the middle of that line that I just drew. This is the price action I'm talking about. Every time we've gotten up there lately, we've rejected off of it, right? That's been the short-term resistance levels, is we start here at about 430 and resistance all the way up to 460, right? And sell off, sell off. Can we break through that this time? Perhaps. We'll see, right? A lot of times as we go into the very end of the year, especially the last week or two, there's a lot of low volume and some funky price action could happen. So we'll have to see what happens there. Support to the downside, if we're looking on a longer term trend, is down here. It starts at about 355 or so, and it's this giant clump of volume. Notice there was very little volume that transpired here between 355 and say 415, right? So every time we wick down, we fill this volume profile in a little bit more. If we go over to the 4-hour, there's that resistance zone that I was talking about up here. This is, the historic resistance zone. It's at about 440. And right now we're just hitting the bottom of that zone, which is at 430, right? We're hitting the bottom of the zone. If we zoom in, you can see we're bouncing right off the 50-day moving average. We've been using it as resistance lately. What was support before back over here has now become resistance. What do we keep dropping down to? We keep dropping down to about the 61.8 fib level. You can see it right here. We wick down to it. We wick down to it. And the 100-day moving average. You can just barely see it. There's a red line that's kind of squiggly coming in right here. That's the 100-day moving average. We almost hit it here. We almost hit it here. So for me right now, we're going to ping pong back and forth between these moving averages, maybe wicking up to 440 or 450. So be careful if you're doing super tight cover calls there. And anytime we get down here with these giant mean reversion dots to the downside, RSI down at 24, MACD crossovers, those are buying signals, right? Whether you're using one type of indicators or another, you can always find those buying signals on the chart. All right, so we've got Nvidia over here. Nvidia was on fire, right, guys? Look at these red dots just on the daily. Straight red dots since all the way back here in May. We dipped below just a little bit there, finally met its match, right? And ran out of steam, printed a green mean reversion dot, RSI dropped below 50, and MACD flipped negative for the first time in an awful long time. What does all that mean? That means it's a buying opportunity, right? In my opinion, that's a buying opportunity. It could also mean that the Nvidia powerful move is starting to run out of steam, but there's a lot of people that missed out back here in April, right? That was the time to buy. April, perfect time to buy. If you missed that, you had another bite of the apple, as you would say, right here in September. Giant mean reversion dot, RSI down at 30, crossover here on MACD, trend flips up. At the bottom of the confluence, bouncing on 50-day, you got a number of things telling you this was a great opportunity to buy at about 170. Now we're right back up and we're at 182. And 182 level, that's been the point of control for the last 6 months. Point of control means the area where the most number of shares exchanged hands. If I showed April on here, likely the point of control is going to move all the way down to there. It did not. It's still, even with this dip, a lot of people didn't buy up the dip. There's a decent amount of volume down here, but more people are exchanging shares way up here at 182, showing you that people missed the dip and they tried to buy in up here thinking it's going to 200. It goes to 200 and then immediately mean reverts back down again. Perfect stock to sell covered calls on and make a bunch of money with. I would know. Palantir, it's so funny. These guys are like twinning, right? So if we look back on Palantir, this is the long-term trend going way, way back all the way to 2023. But if we look, we've had a couple of giant dips. These dips have been buying opportunities in disguise. They don't show up here with buy signals, but you can see that the RSI drops below 50 in these cases. And if we go over onto the 4-hour chart, you can really see it a bit better. Here's that dip where we came back down and supported on the 50-day moving average from August 19th all the way over here to September 8th. Then we bounced on it a bunch of times, finally broke below it, tried to hold the 100-day, broke below that, and dropped down almost to the 200-day. So to me, the 200-day is acting as significant support, 140 to 145, if we even get down that low. Here, the lowest we dropped to on that wick was 147.56. That's buying opportunities to me, right? I believe in Palantir over the long term, but up here, you got to take action on these sell signals too. So some of you that are in the community, you know that I have my own experiment going on with Palantir. I've had 300 shares that I purchased back on October 5th. On October 7th, I sold my first covered call against them. You could look on the chart and be like, why did you buy on the 5th? You bought, I bought this little dip right here. Bought on the 6th, Bought this little dip right here, and then it spiked up the next day, and I sold right there. Why would I buy and then immediately sell covered calls? To prove that you can continue rolling covered calls weekly or monthly and make money. Just so you know, on those 300 shares, over $7,500 in a matter of 8 weeks. So do the math on that. It works out to almost $1,000 a week. It's like $900 a week, or $3,250 a month. Sorry, $3,750 a month if I could do the math. $3,750 a month, right? From just 300 shares of Palantir. That's significant, guys. So is it that I don't believe in Palantir over the long term? No, I just know that I'm going to rent out my shares along the way and make a bit of income off them. I might as well and use that money to go buy other long-term holds. Maybe I can pick up some Tesla shares with that money. Maybe I could pick up some IBIT over the long haul with that money, right? If IBIT's all the way down at $50 and I've got 7,500, I don't know, somebody do the math for me, but I think it's like over 200, 300 shares, something like that, 250 shares. Moving right along, if we go over here to the MicroStrategy Tesla pair, I put some lines in to mark where the 2024 low was down here at 0.21. The 2024 high was all the way up here at, I think it was 1.59. The 2025 high was at 1.49. And then the 2025 low is exactly where we just were. So we just printed that low, and that low was here on Monday yesterday at 0.3641. Today starting to rebound back up again because MicroStrategy is starting to rebound, and Tesla is relatively flat today. So that's the only reason why that went back the other direction a little bit. What do I anticipate? I do anticipate that it may be a longer term, that if you're heavy and you're in MicroStrategy, it may be a little bit longer before this thing starts to rebound. If you're in Tesla and you believe that a rebound will occur and you're like way heavy Tesla compared to MicroStrategy, I'm almost starting to get that way for my taste. I'm willing to go ahead and pair trade, especially in an IRA where there's no tax ramifications, pair trade a little bit of Tesla back over into MicroStrategy. I kind of do it with options though. I'll sell cover calls on Tesla and use that money to go buy more MicroStrategy shares. That way I don't part with any of my shares. I'm merely using one to finance the purchasing of shares of the other. I was doing the same thing when MicroStrategy was flying high. I was selling covered calls on it regularly to buy more shares of Tesla. So my bags are constantly growing. I'm never really selling off shares of either one. I have in the past, but I'm more likely to do it in smaller increments like that. I just feel like it's a little bit safer. MicroStrategy IBIT bottomed out here, guys. Holy smokes, at 3.25. That means it took 3.25 shares of IBIT to buy one MicroStrategy. Just for perspective, back here, you could have sold one MicroStrategy and gotten almost 7.34 shares of IBIT. So it's at half, roughly, right now. It's literally at half, 50% of what it was. You can see my one trade where I did some IBIT into MicroStrategy up there. Wasn't the greatest in the world, but it did get me to another lot of 100 MicroStrategy shares that I could then start selling cover calls on and buy more IBIT now that it's lower. So I've got like a strategy that I do regularly. Over here, you'll notice that on the ARB cloud, we poked our head out of it right here, Friday, November 14th. We are near the bottom of the cloud. I have the cloud set relatively tight. We are well below the ARB price. We've stayed below the ARB price. So all of this is telling you, if you believe in strategy long term, it's a good place to go from IBIT into MicroStrategy or Bitcoin into MicroStrategy. Gold, 1, 2, 3 peaks in a row right here. And now it's starting to kind of level off and go sideways. Seems to be happy at this 388 level. This is the GLD, the Spider Gold Shares Trust. Seems to be pretty happy right around this level. We've ran into resistance here. We ran into resistance again here. It's like this 385 to 390 level. Definitely a selling signal. So if you had some GLD right now as a hedge in your portfolio, maybe a good time to go ahead and lighten the load just a little bit, right? It's up to you. It's not financial advice, but there are selling signals, whether you're using RSI MACD or you're using mean reversion and the confluence model. All of those are suggesting that it is at a local top. Finally, moving over to the STRK, STRD, STRF, STRC. These are starting to rebound, right? The FUD storm was heavy duty back there at the end of November, November 21st, that Friday. The FUD storm was on fire. I mean, these things were all hitting lows that day. You had STRK hitting 72.38. You had STRF hitting 91. First time it had been at a discount or below par value in months and months and months. You had STRD, the one that's just kind of the junk one, 63.56. I don't even know what that makes the effective yield, but it would be sky high. It would be like 15, 16, 17% yield. It'd be crazy. And then going over to the STRC, which is in the bottom right-hand corner, it bottomed out at 89. Quickly rebounded all the way back up right here to almost 98. Dropped back down again to 95, and right now finding a home at 97. And Michael Saylor just announced that the dividend got increased by another quarter point. So now, instead of it being 10.5% per year, it's 10.75% per year. But based on the current price of $97.16, that's an effective yield of 11.1%. How do you calculate effective yield? Take the yield, 10.75, divided by the price, 97, and you get your effective yield, right? Because it's all based on a $100 share price, and STRC is selling at a discount to that $100. It's selling $3 below that, so you can pick up 3% more STRC with the same amount of dollars. That's just an easier way of looking at it. That's my money market. That's my where I stash cash. I am going to show the HIMS chart because in my community I did a challenge just to teach people how to do covered calls. And so I did a trade alert back here on November 13th. It was a little bit premature, right? We bottomed out here and then started back up again. But that was to go ahead and buy some HIMS. And then I went ahead and sold the first covered call here. It's the $42 covered call that expires on 12 of 19. We continued up a little bit. The perfect place would have been to have done it right here. People ask, why did I do it prematurely? I was bored and I needed to get the challenge going. Like we needed to get a covered call sold so that we could learn how to manage it. You know, what do we do if it goes into the money? What do we do if it doesn't go into the money? Do we roll it? Do we buy it back? Do we let it expire worthless, right? We had to have one in place so that we could do something with it. So yeah, a little bit premature on that first little spike. Would have been juicier if I'd have waited just a little bit and done it on the Friday the 28th, just this last Friday. Probably would have gotten maybe an extra quarter or 50 cents a share for it, for what the cover call was. But anyway, HIMS, I'm following it here. It's not, I'm not like huge position in it. I don't think this is my long-term hold for the next decade or anything like that. What do I like about it? I like this, guys. I like the volatility. It goes up and down a ton. Highly volatile stocks offer giant premiums in the options market. And I'm an options guy. So love it. And been making some coin on that already too. So I'll keep you posted on that one as well. All right, guys, that was a banger. Want to see more like this? Make sure to like this video. Make sure you subscribe to the channel so you don't miss any videos like it. Comment below. What did you like best? What did you learn today? And what would you like to see more of? I read every single comment. I try to respond to every single comment. It helps me shape where we're going with the YouTube channel in the future. If you want to see more, book a course, right? The courses were all just on sale. That sale just ended. I ran it all the way through Cyber Monday. That sale just ended, right? So go book a course at gdenarocoaching.com. I teach a course on TradingView and technical analysis so you can master the charts like I just showed you, or on understanding options so you can understand some of that jargon that I was talking about during this entire video. And that understanding options course. Now, if you want to get a discount on those courses, go join the community. If you go become a founding member of the community right now, you get 25% off all courses the whole time you're a member of the community. As long as you're an active member of the community, you're getting 25% off of those courses regularly, right? So it would make sense to join the community and then go buy understanding options because you'll actually save money in doing so. It'll be less than just buying the course outright. All right, where can you do all that? That's over at gdenarocoaching.com. Remember, the founders one is /founders. That was that link right there, founders only. And finally, I'm G Denaro. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Guys, thanks for tuning in today, and we'll see you next time. Take care.
Yo, G Denaro in the house. Charts up, let's go. G Denaro, coach of the trade, stacking that green. T at Tuesday, money Monday, living the dream. Options popping, Bitcoin rocking, Tesla on fleet. Join the community.